Hello and welcome to CMXtra, the Capital Markets Exchange podcast. I'm David, and in today's show, we're taking a deeper look at market resilience. When an exchange goes down, as they inevitably do, what happens and perhaps what should happen to ensure disruption is kept to a minimum. Before that, though, we're reminded that here on CMXtra, we've been covering topics from AI on the trading desk to mastering new issuance throughout the series, as well as hearing stories from the industry's rising stars and next generation of trading leaders. If all of that is your bag, then do look up our back catalogue and hit subscribe wherever you get your podcasts. And later on in today's show, we'll be sharing details of in-person networking and events coming up in 2025. But back to today's topic. Market outages occur for any number of reasons, from software slip-ups and cyber hiccups to third-party supplier stuff-ups like we saw with the CrowdStrike incident in July 2024. Strides are being made around the world to strengthen trading resilience and continuity. And from a regulatory point of view, DORA, the Digital Operational Resiliency Act, is now in effect in Europe. Yet, service interruptions aren't likely to be going away altogether anytime soon, which pushes the focus instead to incident mitigation and response. When it does become apparent that there is an issue, how should participants and stakeholders across the market best respond? Well, joining us today to respond to that setup and share their views and advice are former Barclays Head of Equities Market Structure and Market Access for Europe, Laetitia Visconti. Hello, Laetitia.
Hello, thank you for having me.
Thank you for being here. We also have Head of Market Structure and Liquidity Solutions at KCX, Rob Miller. Hello, Rob.
Thank you very much for inviting me.
We have President for North American and European Equities at CBOE, Natan Tiefenbrun. Hello, Natan.
Hello, David. Nice to be here.
And finally, Executive Director for the FIX Trading Community, Jim Kaye. Hello, Jim.
Hello, David. Hello, everybody.
Thank you all for joining us today. And to kick off, how about we talk about the outages themselves and their impacts? And Natan, I'll come to you first on this. Natan, do you have any sense of the actual regularity of exchange outages and what the consequences are for the various participants?
I think it's a handful a year in Europe that we see.
Right.
I would say exchanges invest very heavily in resilience generally to hardware failure, and most exchanges, I think, do that pretty well. So the more common causes of outages have been software or network configurations related to change management on the exchange side. So it's really important how exchanges manage that change, how frequently they change, the magnitude of the changes that they make. I think the impact on participants depends on a number of factors. Of course, which day of the week, how busy is that day? If it's a big index rebalancing day, of course, that would be much worse. The time of the day, because it's software change, which tends to cause the biggest outages, they typically start earlier in the day, but there are some that happen during the trading day, and that can cause more disruption when firms don't know what their risk exposures are, their positions, the treatment of open orders, recent trades, etc. And of course, the absolute nightmare scenario is a outage on an index rebalancing day happening late in the day, which interferes with the ability of the exchange to run its closing auction.
Yeah, let's come back to the nightmare scenarios in a moment. But Rob, I want to come to you next from your buy-side past. What's been your actual experience of outages?
So if you're on the buy side, you're the last person to find out in the chain. So normally you'll find that the exchange is aware of an issue and they will be desperately trying to figure out what is going on, what needs to be fixed, who it's impacting. They will hopefully let the sell side know, and then it's a case between the two of them of trying to figure out your positions. So which fills, if any fills have been bust, where is everyone's kind of bottom line on where they are on the algos. And then after that, there's the buy side. So they're normally the last to find out. And it's I would say it's quite difficult to try and figure out if there's a street-wide issue or whether it's just with one sell-side firm. And so from the buy side, I think communication is the one thing that is key and that's missing from outages.
Definitely want to circle back on the communication thing in a few moments' time. But Jim, outages don't always fit neatly into the grand old Duke of York model, do they? It's not always a case of being wholly up or wholly down. And that kind of lack of binary can create a bit of confusion, can't it?
Yeah, I think there are two aspects to that. One is, as you rightly say, it's not simply exchanges are up or down, that there are sort of variance in between. And we have seen historical cases where you've either got some kind of partial outage where things are not working for a subset of the exchange, and maybe a subset of participants, maybe a subset of instruments, or it may be that there's some kind of degradation of service which doesn't quite categorize itself as a full outage, but it still has an element of seriousness about it. It could be market data running slowly, it could be all sorts of things. So that's definitely one thing. I think the other thing, and this kind of speaks perhaps a little bit to the communication point and also to what Rob was talking about, was that getting the information out to everybody who's impacted is a problematic thing to solve, and also the impact on different people in the industry differs as well. So if an exchange is having some kind of partial outage, it may be that some end clients, the asset management community, that can be perhaps mitigated in some way by their broker, or it may be that for some reason they're just simply not impacted by it at all. So it's a very complicated and multi-layered problem, which is a bit harder than just up or down.
And speaking of the kind of complicated and multi-layered nature, Laetitia, Natan spoke a few moments ago about a certain resilience to hardware failures, for example, and therefore software failures, change management, and so on. Of course, there are also bad actors, aren't there? Whether it's nation state sponsored or standalone bad guys who might be hell bent on targeting the markets too.
Yeah, I think, like as Natan was saying, is we don't have that many outages when you look back the last 10 years. So we had quite a few in 2020, including cybersecurity issue, not in Europe, more in Asia. So with one denial of service attack on the New Zealand market, and that lasted, if I well remember, for almost 4 days. You had one suspected on the Tokyo Stock Exchange. It's not something we've seen in Europe. So again, I think you were mentioning before things like DORA. It's partially what is being asked to be addressed, not only for the infrastructure exchange control, but for also all the other services they're using. And in an economy and in trading, it's starting to come as well, where you start to have systems going into the cloud. You start to have a little bit of a more open system than it used to be. Maybe that's a risk that is potentially more likely to happen than it did in the last 10 years. On the impact on the outage, I just want to go back on what Jim was saying. When, having been at the receiving end of those outages, the very first thing you're trying to assess is whether or not the issue is coming from you or the issue is coming from the exchange. Then it's starting to actually trying to determine exactly where the issue is. A delay on market data is potentially worse than a market stopping altogether, because you're basically late on what the market is doing. So you're going to trade completely off base. The other thing that is worth noting on the outage issue is currently in Europe is very different to how it works in the US. So in Europe, when the primary exchange is going down, everything stops. So you have partially reasons which are historical, because fragmentation in Europe only came about in the 2008, something like that, just after MiFID I. So a lot of the system are actually legacy, rely very heavily on making sure that the primary market is actually up and running, and the market data you're consuming, especially for all your risk checks, that will generally be done out of the primary exchange market data, are operative. So you are in a situation where if the primary goes down, everything stops within a minute. And you have to ask yourself, when we are operating in a market, and if you take all of the major indices, looking only at continuous trading, primary exchange are around 60% market share mark. So you have 40% of the liquidity currently happening on MTF like CBOE, like Aquis, like Turquoise, and so on. So how come we're not getting to a point where market participants take the conscious decision to continue trading on alternative venue, at least for continuous trading? Closing auction is a completely different ballpark problem.
Yeah. That difference between US and Europe, for example, is well noted. And I want to come back to that in a moment when we look at addressing these market outages and market connectivity. But I just want to circle back to something that Natan touched on earlier on, and it's around those closing auctions, perhaps. In terms of the nightmare scenarios here, what are the worst things that can happen? You mentioned outages maybe change over a weekend or overnight or something, and morning being one thing. But it's when we start getting towards the end of the day, that's when things can get really sticky and hairy, isn't it?
Yeah, about, on any given day, between 22, 23, and sometimes as much as 30% of the day's volume is happening in the closing print. And of course, that price is the benchmark price for fund flows, for ETFs, valuations, etc. On a big index rebalancing day, firms may have billions or tens of billions of flow they need to trade at that closing price. Now, what most exchanges and what most index benchmark publishers say today in their rules is if the exchange was to go down at, say, 2 p.m. and we can't run a closing auction, that last trade at 2 p.m., that's the official close. And on a day when firms have a lot of business that they want to trade and they haven't already traded it, the problem with that 2 p.m. price is it's not addressable. And there's now no way for the big investment firms to transact that business at the closing price. So it's a non-addressable price in the rear view mirror. So I think that's the nightmare scenario, is that all these firms suddenly want to do risk trades to lock in the liquidity. They've got investors expecting either to withdraw cash or to have cash equitized in the market. And so they want to trade on risk. And the banks, of course, are dealing with an outage, and they may not have the balance sheet available to transact in a principal capacity to that extent. So that's why I think, not just at CBOE, I think many people would refer to that as the nightmare scenario. But it's worth reflecting, thus far, we haven't had to deal with that. So whether that's luck or whether that's because exchanges are particularly careful about not making software changes in the run-up to those big events. So a mixture of luck and skill, we haven't bumped into that scenario yet, thankfully.
And I think, Natan, actually, the point you're making about skill, financial market infrastructure is super complex. And you have to give it to exchanges and sell side and buy side alike, that when you look typically at the period of very high volatility, systems are very resilient right now. So, and the way we're going about migration and things like that, they're very controlled as well. You're basically going to have dress rehearsal, you're going to have like big repetition before the big day. Doesn't mean that everything is going to go well at this time. The real risk is something being touched during the day that actually trigger a technical issue. And that's where you're going to actually kick in those nightmarish scenarios, which again have not happened yet. Famous last words.
Famous last words. Somebody touch wood, please. So look, there's clearly plenty of case history there around outages. We mentioned a few of them there. Of course, Euronext as well, not all that long ago. And the risks and impacts are also well known. But what about preventing and mitigating those outages? Natan, you've written on this in the past with proposals to improve market resilience to outages. I've been reading a paper of yours from 2021. Tell me, how have things progressed since then, would you say?
Well, so a central part of that, the recommendations in that paper, was that exchanges should have a clear communications playbook. Mm-hmm. ESMA actually then picked up not all of the recommendations in the paper, but probably the least contentious subset requiring exchanges to have such a playbook. And so I think most do. And it includes, for example, having somebody nominated to be responsible for customer communication. As Laetitia said, when an outage happens, you don't immediately know the cause. That requires some investigation. So the risk is that everybody's focused on either investigating or fixing the issue, and there isn't a clear accountability for somebody to manage communication with the with the industry and the participants. I think a second element is that there has been a gradual recognition that exchanges, rather than communicate only directly to their member firms, that those communications that you're investigating an issue and giving regular updates, that should be more widely available. What Rob said, the buy side are the last to know. I accept that. But most exchanges now actually have a public web page where you can track status. You'll see lots of stuff which is a waste of your time that you're not interested in. But the minute that there is a suspected issue from one of your brokers, you can typically navigate to that right place and see what the exchange is publishing about what they currently know about the issue. So there has been some improvement, I would say, in terms of the wargaming and the preparation for the comms.
And Rob, are you seeing any of these improvements? You were speaking earlier on about being somewhat blind whenever there is an incident and sometimes being the last to know. Do you get a sense that communication is improving, that there are places where you can receive information in the event of a suspected outage?
Yeah, I would definitely say that communication is improving. We're getting a lot of emails going out. You can, as Natan said, you can go onto websites and you can actually see if there are issues. I think it can still be better. So each exchange will have a different place on their website where you'll be able to find these issues. Some it's very clear and it's very, at the front of the first page that you log into. Others you have to click through a few things and then you might see it there. I think we alluded to earlier that there's also a lot of other things that get updated in these feeds. If you're on the buy side, you might not be used to seeing some of these other messages. So trying to filter through to see what's important and what's not important, especially if you have, one exchange go down, but you've still got 500 trades on the pads for other exchanges, you're still trying to manage those orders that are still live. So trying to find, easier communication, I think, is always going to be an added value.
And Laetitia, in terms of... Sorry, go ahead.
Yeah, so I was just going to add something to that, which is one thing that I think we need to be careful of with looking at information directly from exchanges is... unless you've got a kind of PhD in how all the exchanges work, there's an element of interpretation involved. If an exchange has got some kind of issue with a particular bit of itself and they sort of announce what that bit is and you don't know what that bit is or what it does and how it impacts you, it's not particularly useful. So I think it's kind of back to the exchanges as well to make sure that the communication is clear and means something from a kind of trading perspective, not necessarily from their own infrastructure's perspective.
And there's also the question of how do you restart? So the point that Rob made earlier is you want to know your fields, you want to know what you have been executed on. When an outage happens and basically communication between the exchange system and the sell-side system or the direct member system is severed, you basically have a big question mark of how many messages were on the line, didn't reach you, and that you will not know about once the exchange is back up. And for the buy side, most of the time, clients were asking us, can you actually give me outs? Can you confirm that I will not get any execution on this? And so you have that's where you have all the risk element of it kicking in. So everybody will be extremely careful about what they are doing. And that's also why communication is extremely important, not only on what's going on, but on what the exchange knows about what are your execution and your live orders.
Yeah, I would add to that. I think, generally speaking, the regulatory obligation on exchanges to operate an orderly market, but also to get your system back up and running quickly when you've had an outage, I think is slightly counterproductive. And I think what the obligation should be is to contribute to the orderliness of the overall market ecosystem. The reality is exchanges, they might not be able to cancel open orders at that point in time. And they might not, for example, want to automatically cancel customers' orders whenever they have a technical glitch. Now, we do at CBOE. And the reason we do it is because if we do have an outage, then customers can automatically assume that they're out of the market and that there's no further executions to come. And so that's just we take that decision because we think it's the right thing for the ecosystem. If we're being selfish, we might want to hang on to orders for a little bit longer, etc. So I think there's a little bit too much discretion in the system for exchanges to kind of figure things out. And really, there should be a bit more pressure to move to a default model where when you have a technical issue, by default, you give customers that outage, that out. And by default, they know there are no further executions that are going to come. It's a bit like when you're driving like a race car, when something goes wrong, the brakes come on automatically because, that's how they ensure there's no brake failure. They flip the risk control the other way up. And I think exchanges could be encouraged to do the same.
I think on that topic of coming back up, if you have a look at the quality of spreads and the volatility in the market for the first half an hour, maybe a little bit longer, you'll see the conditions are slightly worse than they were, when the market's in full swing, as price discovery is coming back again. And I think, going to what you're saying, that's because half the market participants are still trying to figure out, have I actually been trading in this? What is my position? They don't want to oversell or overbuy and then have further issues down the line on their portfolios. And so, as you said, if everyone knew their positions and were confident in that, when an exchange comes back up again, you would hopefully kind of see better, market quality.
And Robert,
yeah.
it feeds as well into what we were saying earlier, is the fact that when it happens in continuous, the market stops. If the market was not stopping and people were naturally basically continuing to trade on other available platforms, intuitively, you would think that this spread widening and this lack of liquidity will be less so. But as you said, the main condition is you need to know your position. If you don't know your position, no one's going to go.
And just coming back to the prevention, the mitigation of these outages, Laetitia, you mentioned earlier on consolidated tape and the difference in how the US markets might operate in comparison to the European markets. Just talk us through some of these things. Consolidated tape. We've also heard about 15-minute VWAP as well, as has been suggested.
I think consolidated tape can help. It's definitely not the silver bullet, but it can help because it would give people a sense of whether or not people are continuing to trade. It will give you a sense of what's happening overall on the market. So now the deal we have in Europe has only a very limited pre-trade transparency. So it's anonymous. It's only the first limit. So it doesn't really give you a sense of how many people have come back, but it's a first step. It could also be the point I was making before about how you run your risk control and so on. When I'm saying running risk control, it's all the risk in line. Okay, it's not like valuation of your portfolio or things like that. It's very much about like orders I'm going to process. Am I out compared to the market? So it's really making sure notional price deviation and so on works correctly. It doesn't have to be the primary market data. If it was replaced by the tape, even the first limit is sufficient for this kind of very basic risk in line check. But that's a potential to unlock a possibility of continuing to trade. I had this discussion like a long time ago after the bout of outage we had from 2019 to 2021 with clients. A lot of clients were saying, I'll be willing to continue to trade, and I'm trying, but I see the liquidity drying so fast that I have no choice but to stop. So I think it does need a collective effort to do this. The tape will help because it will be a common reference for everybody. The point with the US is in the US, they will have the same kind of organization than we have in Europe. You have backup for your hardware, you have secondary site and so on. They do have also the possibility of backupping each other for the closing auction. In Europe, we never managed to get to this point. So we are more now talking about how can we determine a price for the closing auction that cannot be easily gamed as well, because the point of a 15-minute VWAP is also a way of making it more difficult for people to know what's going to be the uncrossing price. But the point of Natan is the crucial one. Very well, you're going to be able to do all your index calculation and your portfolio valuation and so on. But if you can't trade on it, it's a half-baked solution. So there are a number of trading mechanisms that could be leveraged for this. I'm thinking trading at last, which are the post-close type of market arrangement, but they're very, very small in terms of contribution to the overall liquidity. But there could be a technical solution for it if you had a price you could use to effectively trade.
So Matt, the reason, I think early on, before I worked on the exchange side, I advocated for it. But what about an alternative fallback auction? And sitting at the exchange side now and talking to lots of different trading firms, they're like, when we've had a technical outage at one of the exchanges, the last thing we want to do is say, let's try something we haven't tried for a couple of years and see how that goes. And so the reason that we switched to advocating for a 15-minute VWAP, the final 15 minutes of the scheduled hours across those venues which are still operating, is because essentially that's the nature of continuous trading on the open venues, and there's less change and less operational risk involved in the sell side in continuing to execute in that fashion. So I think that's why we arrived at that's probably the most workable mechanism, because it should be the easiest thing for firms to do. But I would highlight, there's no point of saying, oh, yeah, that sounds good, let's do that. What we would really need, of course, is a source of that. So you'd need the consolidated tape or some other central source to produce a single truth. What is that 15-minute VWAP? What are the rules? Which order books? Which categories of trade? But then also you'd need the index benchmark calculators, many of which are owned by incumbent exchanges, to say, yes, in the event that there's no closing auction on Euronext, on Deutsche Börse, on LSE, on NASDAQ, we're going to default to that VWAP from the consolidated tape. For example, absent its adoption by the benchmark publishers, it doesn't become a useful addressable price to the investment community.
Yep. Okay, we're going to have to move on because we've got a few more points that we want to try and address today, but really, really good points. Communication and best practices is where I want to move on to next. And, we've, I think, made the point already that in almost any incident, the first casualty is communication. And, Rob told that story of his tales from the front line. So Jim, how can communication be improved during exchange outages? What do we have in the way of best practices and improved communication mechanisms?
So we've been working on some things with our members on this, and we've had a bunch of buy sides, a bunch of sell sides, a bunch of venues, and a bunch of vendors as well get together and try and knock their heads together around that particular question. There are a number of things that come out of it. One is that you need a standardised approach to the communication. You need a kind of common terminology, as far as you can, a common definition of what severity means, a common definition of what an outage is affecting in terms of functionality, in terms of scope, and so on. There's also an aspect, and I think Rob mentioned this earlier on as well, the idea of having a kind of a view through the life cycle of an outage or other kind of incident. This idea that you might start off in a fact-finding phase and you don't know what's going on, but somebody's looking at it, to we now have a pretty good idea what's going on, here's what it is, to here are our plans for restarting the market, to we've restarted the market, and that kind of life cycle and all the communication around that. And I think also the other thing is the recognition, I mentioned this earlier, but the idea that outages mean different things to different people depending on who they are and where they are in the kind of trade life cycle, and who's connecting directly to an exchange and who isn't, and so on. So the idea that you might have communication being kind of altered, if you like, as it goes from, say, an exchange to their participants to perhaps the clients of those participants. So it gets very complicated very, very quickly, but I think with the right kind of standards around it, you can piece it together. You can come up with something which actually does hang together. And we've been trying to test things against real, historical case studies of where exchanges have had problems, and it's very insightful. You do learn a lot about how outages work and how we can, in theory, communicate much better.
And Rob, I'll lean on to you again here, based upon the war stories that you've had. In terms of best practices, there, we've already spoken about some of the ways that things might have improved over the last 4 or 5 years or so. What else is there that is happening that maybe you would like to see happening through collaboration with Jim and the community and others?
I think it's a difficult one because to communicate electronically might be impossible if there is an outage.
Indeed.
And so, ideally what I would like to see is something in my EMS that says this one isn't live. But how do you get that? And so, thinking about fixed messages, like when we're sending like a heartbeat message or something like that to an exchange, do we kind of use something like that? The other things that could be easier, and you can see the European Union has managed to do this on every single website you visit. If they've got a cookie, you don't even have to read it anymore. You just know decline, accept. It's the same thing. It comes up straight away.
Yeah.
Should all exchanges have something like that on their websites? So you don't have to find, through multiple pages or looking for, through different feeds somewhere. It's there. Accept. Now I can go and have a look.
Right. Natan, from an exchange point of view, some kind of canary cookie, perhaps?
I think we'd be interested in anything that would make the experience better for market participants. As a big global exchange operator, the term your website in itself, it might be a little bit hard to nail down. We don't have, legally speaking, of course, we have an exchange in the UK and an exchange in the Netherlands, and we have equity exchanges and derivative exchanges and FX. And so I think it's, but I think it's a great suggestion. I think, and the principle being, it should be much easier to find that information is a principle I totally agree with.
And
There's also a question on the communication, which people don't always appreciate. And I remember one outage, can't remember which exchange, where you started to have people saying that some members had received information earlier than others. Exchanges have also the difficulty of having to manage the fairness in terms of access to information. You need people to be told it's going to restart exactly at the same time. So that makes it much more difficult for the exchange because they need to make sure they're communicating to the whole of the market at the same time. And by the way, the story about the exchange, it was actually a red herring. It was absolutely not true because they had this in their playbook and that was only being communicated, like Natan was saying earlier, by one person who was actually releasing the information, so everybody was having it at the same time. But it can be overwhelming. It's because too much communication kills the communication. So you have buy side who have 10 brokers, they're going to receive 10 alerts.
Yeah. So look, whether there are technical challenges, whether there are procedural challenges or communication challenges, wherever there is a challenge, there is an opportunity, right? So, Natan, given the evolving landscape, there are opportunities, are there not, for new players to offer solutions or indeed infrastructure to try and address these market disruptions? Or would you say that there's a risk of too many new solutions only adds to the complexity here?
It's a good question. I do think, as we've said already, that the consolidated tape could play a helpful role in being a source of status for the broad market, status for individual venues, etc. And that's the function it performs in the US. That partly comes from it being a regulated entity in and of its own right. In terms of commercial responses, I'm less convinced. I do think, in continuous trading, the alternative venues are still open. So I guess there's a question, which is, once the consolidated tape is available and you've got another source of pricing for your pre-trade risk controls, etc., are firms organically going to shift away from over-reliance on the primary price, or will they need some encouragement, whether from the customer base or from the regulatory community? Will these will index benchmark publishers adopt a backup price again organically, or will they need some encouragement? So, but I kind of think it's the kind of conversation we can have in 2 years' time. There's not much point. It's a bit of a hypothetical conversation today, but as you improve parts of the infrastructure, then hopefully there's the opportunity to pick up some of these topics and move the ball forward.
And as we begin to wrap up, same question to you, really, Rob, Laetitia, and Jim. Rob, I'll come to you first. What would you like to see to try and tackle the market outages here? Is there anything else on the horizon that is there that you'd like to see? Does it need more regulation? Does it need the regulators to step in? What's your take?
I think more regulation. You have a lot already with MiFID and DORA. So I think all the framework is here. I think people need to be extremely pragmatic and let the market organize itself. So again, the point we made, if we manage to get to having resilience in continuous, you unlock much more easily the possibility of having a solution for the close, whether it is a 15-minute VWAP or it's the last traded price. But if you think about the workflow, if you have an outage starting at 1 p.m. in the afternoon, continuous stop, who's going to continue trading if they think that the last traded price is going to be the close? You work in reverse. You have the end of the day before the end of the day, if it makes sense. So if you continue to have trading during continuous, then you have much more of an argument combined with OXCT to have a solution type 15-minute VWAP and to have existing mechanism. People are already connected to all those trading at last session that could be used if you need absolutely to do a transaction at the closing price. The point of Natan before, 30% of the liquidity is done in the closing auction. So it's getting back to the pragmatism and getting back to what do we need to safeguard. You want to achieve a resiliency plan that is going to cover 100% of shares in Europe, you'll never manage to do it. If you cover the main indexes, you're in a much better place from a resiliency and risk point of view.
Pragmatic approach from Laetitia. Jim, is there anything else to wrap up today that you'd like to see happen or you're hopeful that might be just around the corner for us?
I think, and this isn't something, a kind of big thing that is like going to be created or happen, but I think one thing that we as people in the industry need to really do is understand this infrastructure better. My own background is a bit like many of the other people on the call, is also kind of Excel side. And one thing you do is as you go through these experiences of outages or indeed things working perfectly, is you gradually pick up an understanding of how the exchanges actually work and how the infrastructure around them actually works. And the more of that you have, the better you can deal with an outage when it does actually hit. You've got a better understanding of what you can do to respond to it and indeed what's really going on the other side. That's a big ask for the entire industry to kind of educate itself on how everything works, and not least because it changes all the time. But there are pockets where you can kind of, I think, be educated or perhaps educate yourself as an industry practitioner to be able to deal with these things better, just armed with more knowledge.
Final word to you on this for now, Rob. Is there anything that you would like to see? Natan mentioned maybe we should be talking about this in 2 years' time. What do you hope's in place in 2 years' time, perhaps?
I think it's pretty much echoing what everyone has already said. I think it's handling of communication, and then if there is an alternative mechanism for important parts of the trading day to restart, it's how do we as an industry all agree that we're going to participate, because there's no point if there's only 10% or 20% going to do it.
All right. Listen, I think we'll call it a day there for now. Thank you very much indeed, Laetitia, Rob, Jim and Natan. Really enjoyed our conversation today. Thanks, everyone.
Thank you very much.
Thank you.
Thank you.
And if you liked what you heard today, then a quick reminder that you can catch up on our previous episodes on everything from AI in trading to mastering new issuance, as well as a lot more over at the-cmx.com. That's the-cmx.com, as well as in all the usual places that you'll find podcasts. Do leave us some feedback. The algos love feedback, and so do we. So that's the CMX page on LinkedIn. It's a great place for your feedback. And while you're there, why don't you tell us what you'd like us to cover in future episodes? And speaking of the future, some Finance Hive 2025 dates for your diary. January 23rd, that's the Equity Hive members meeting in London. February 20th, we go to Singapore. That's for our Singapore Finance Hive members meeting. And we're back in London on March the 19th for our Fixed Income Hive members meeting. And then everybody, FI, FX, equities, the whole shebang comes together for the big one. It's CMX 2025 back once again at the Woolwich Works in London. And that is on Wednesday, 2nd of July, 2025. And if you want to find out more about Finance Hive, about any of those dates, then head over to the-cmx.com. But that is all for now from me, David, from all of our guests and everybody at the Finance Hive. Thanks a lot for joining us. See you next time.